Hello everyone, welcome to another video. So today we are going to talk about how the markets are going on, what is the market condition, what should be our strategy as being an amateur investor or new investor who is not too much familiar about the markets, and how should we go about it. So we all know what is happening all around in the markets nowadays, but the problem is that we don't have any idea of how the future will be. So at this point of time, we are very much confused about what should be our strategy, because everyone is saying that this is a dip and we need to invest in this dip to get a great return in the future when the markets will go up again. But the point is, everyone has been very unclear about what should be the strategy of buying the dip. So today only, our main problem statement, or the thing we are going to talk about, will be on your screen. Why, when, and how should we buy a dip? So of course, before that, for people who are not aware of many things, and as a revision as well, let's bring some facts in the picture, and let's see how we should look forward to it. Let's make two graphs. Okay, one for a upward sloping market and another for, of course, a downward sloping market. Sorry for the graphs, my drawing is pretty bad. So let's talk about both the situations. In situation one, as we can see, the markets are going up. What will be the strategy of, just give it a second and think about it. What is the basic strategy anyone wants to do? Everyone wants to buy it somewhere around here and sell it at this place. In the other case, everyone would want to short the stock at this place, which is selling a stock at this place, and covering it up at this place, which is buying it again, covering the past sell which we have done. So these are the basic strategies which all of us are pretty much aware about. Now, with this strategy, there comes a name attached to it as well. There's a very important and very renowned concept, which is known as momentum trading. Momentum trading is basically what I've told you in the previous slide. Just looking at the momentum of the market, seeing that it's going upward or it is going downward, investing to it, buying the dip and selling it in the future when it goes high. It all comes under momentum trading. But the only, or one of the problems with the momentum trading is we are unsure about what is the future of the market. We know that, okay, we have a certain idea of the market is going to a dip, but we don't have the correct idea of how much it is going to go in the dip, and when will be the right time to buy that stock, and when the future will go up to a certain extent, and that will be time to sell that stock. So the point is timing the market. Nobody in this world can do that. Neither we should try of doing it, taking too much risk. Of course, we should try and do it. That is the only way we can earn profits in the market. But doing it uncertainly and giving all your investment into it or everything is, of course, not a great idea. We have been talking about it, that stock market is not somewhere where you need to invest all your savings, but it is a profit generating object which can help you out with some of the money which you might not need in the shorter term. And in the long term, of course, the market will give you a better return than any other investment which can be done. And it is somewhat not that risky if you're making an investment for a longer term. So now talking about, we got the thing which you want to do. We also know that what is the situation and what do we want. Now we need to talk about how and what should be our strategy. For that, we need to see and capture the facts from the past as well, and what is the current market situation as well. For that, we need to hop on to the other tab, and we have to see this Nifty chart. Okay, this is basically the Nifty graph which have been plotted, and we are going to see the position at let's say this place where the 2007-8 financial crisis took place. So somewhere around December, the market started falling. Everyone had this notion that, yeah, markets are falling. This is a dip. We need to buy the dip. Now the problem with that is, if someone would have bought the dip at this place, he would be very demoralized and very demotivated with the fact that his investment is now at this place. He or she might not be able to take that risk with himself and might sell their investment somewhere around here because they don't have any trust in the market anymore. And their notion is the market is not going to give you a return. I think it's going to go low and low and low. Now the problem is, of course, this was the previous peak, and in the future, this peak would have broken again. Now, if someone would have waited for the peak to break again, then only he would have generated a better profit. See, at this place, of course, the previous peak was broken, and every time the market sees a dip, the previous peak is broken again in the future. But you need to wait for the that thing to happen. Now, if we're going to take an example of if someone would have invested all their money in somewhere, what would you say, like this, all their 100% budget they would invested at this place. Now he would have seen his investment to go low, and this is not a great strategy because you're buying it over here, or you might be selling it because you don't have that much time horizon, and you'll sell it in 2-3 years, and now you won't earn any profit. You're at 0% profit. Now, what should be our strategy towards it? Not investing all of your amount at once, but there's another way we are going to talk about. Before that, we also need to see what is the current market situation. Now, we all know this is the situation. Yeah, somewhere around March, the market started falling. This is the place where it is now. Everyone want to buy this dip. The problem is we don't know how further will this go in the future. We don't have a single idea of how it will go here. If it go, or maybe it can go here as well. So the point is we need to have strategies for both the situation. For that, we need to bring a concept of downward averaging, about which we are going to talk about. So hopping on to the downward averaging part and how we should do, and what is the strategy behind it. So basically, we have a graph over here, and it basically is a perfect denotation of what is happening in the market right now. Everything was going very nice, and suddenly everything has fallen into places. Now, what should be the strategy of an investor like me and you? This is the point where maybe we are standing. Let's take an example that market is going to go further down, and this is just an example. It can be a situation that market can go up again, but the point is we don't have any idea. We're just taking examples and assumptions of what should be the strategy in any scenario of us. Now the point is, we are somewhere around here, and we don't have any idea about what is going to happen in the market. We have 10,000 rupees as a budget, which we are going to invest in the stock market, but how should we do it? Now the picture comes in where we need to downward average our investment. What should we do? We have to break our investment into 4, 5, or whatever you say amount of installments, right? And what we do is we like for 10,000 we make 5 installments of 2,000 each. Now we have a notion of market dip, and we want to buy this dip. We don't want to miss the opportunity. Maybe the markets will go up again, and this is the right time to buy, and this is the bottom. Maybe that is the case. What should be our judgment over here? We should invest 2,000 over here where we are standing right now, maybe, and our motive should be of investing more when the market go down again. Now, if it falls further, we need to invest another 2K over here, another 2K over here, another 2K over here. We might miss the correct bottom, and we see the market raising again, and we need to buy our 5th installment over here. And now we have spent all our 10,000 rupees, and we need to compare it with what would have happened if you have invested all your 10K rupees at this stage only. You would have bought at a higher price, which you would have bought at a lower price as well. So all your investment going at once is not a great idea. Let's take an example. The markets go further over here, and you sell your investment at this place. Now, if you have invested all your investment at this particular place, you would have sold it here, and your basic return would have been the point from here and here only. But if you had invested 2K over here, and again at the next stage, you would have, if you actually weight compound it, and you'll get to know that you have you run your own calculations, you can simply see that this is a more profitable approach which one can go for. And of course, you'll say that there's 10K and this much, you have invested 10K over here, the weight is greater, and this will, of course, give a better return. No, if you make your calculation yourself, and you will get to see that this is a very better strategy for going towards in the market at the current situation. Now, some of you might be asking, maybe, see, Karan, the situation could have been like, this is the point where the market is going. This is where we are standing, and this is the place where market is going. And we go, if we invest 2K over here, another 2K over here, and another at here, this is not a great situation which anyone wants to be. But the point is, we have an idea, we have this notion from the past. We also know whenever we have seen a dip in the market, it has broken its previous peak again and again. So even if we are at a situation of the bottom already, there's still a very good hope that it will break its previous peak again, and it will go further up. So all we need is patience in the market, and things will go off, only given a condition that you have been investing into a very strong stock which have great fundamentals. seeing the dip doesn't mean that we can invest in any asset and everything as it is at discount. That is never the case. You all need to perform your own due diligence before making an investment. If you trust a company, then only you should invest in the market, in the particular stock. So that is the first condition which comes after this. So this is all which I wanted to share about, because we have this in the market that this is a dip, we need to buy it, but that doesn't mean we need to buy it anywhere. But the point is we need to do make our decisions in a very effective way and efficient way as well. So thank you so much for watching this video. I hope you got to learn something out of it.